All right, hello guys, and glad to have you on board again today. We are going to start as usual our review of flow trading and all ranges as we explained last week. First TLDR is that I'm going to be very pressed by time this week, and therefore I wish I could do more, but probably this one will have to be limited to 10 to 15 minutes at best. So here we go. Regarding the S&P 500, we're going to go straight to the point. Remember, you need to always, if you're doing flow trading, start with doing your low risk analysis. And in here, some people might be wondering why I'm switching in between the US 500 and SPX. It's just the low risk strategy being on the larger time frames. You'd rather like to use the cash market as a reference in here. Instead, on the other hand, when we do make intraday trades, so daily and below, and mostly below daily, using the intraday data would require to have just as much data as possible, including overnight data sets. So that means when we do intraday trades, I'm using US 500, which is a cash derivative CFD contract, which takes into account the overnight trades, while on the other hand, we do not have this overnight data, but we have the purest data sets by looking at the S&P 500 cash index. So I recommend doing the long-term analysis out of this SPX and then derive your short-term trading activity on the US 500. So you need to gather information from this and port it out to the other ones. So the truth is that in here, as we've mentioned, we are now headed for somewhat like all-time highs. Of course, God knows how long it's going to take. There's still the slight but still possible outcome in which we will reject out of a double top in this weekly context, and that would be, well, we validate this double top third range boundary, which we hardly can trade, but still is a possible outcome. So until then, we need to say, well, there is a potential weekly third range boundary which we can't hardly use. The most preferable outcome now would be to wait for the monthly reference context to be touched, and it is set right here as we had a new year turns. We therefore had new context in the monthly chart, which update every year, basically. So we had a new area, which stands in here at 4,900 or so, and climbing all the way up to 5,300. And by doing just that, well, we know in which area we could now trade low-risk strategies in the monthly reference time frame. Remember, when we are into those areas, we can only sell. That means there is a low-risk taking profit or sell area what can be happening out there. So we need to take it all out and port it into the US 500, and that's basically what I've done here because I just recorded it for the French guys. So basically this is the area which we're going to be trading all year long as a potential speculative bearish area. That's where 3 time frames below, therefore 4 hour now, we're going to be potentially looking for potential bearish flow reaction. But remember the sequence itself. It just says, first of all, we need to get into the area, not just getting closer but remaining below. So in terms of year-end updates for flow sequences, first thing we can say for sure is that we've switched the time frame now. We're no longer H1 trading, we're now H4, and this H4 trading activity needs and requires prices to go higher. So we're going to have to wait until we get there first, and once we eventually get there, we're going to have to wait for flows to emerge out of this. Remember, we never trade the first flow. We let the market create it, and we know what conditions we want to see to have it fulfilled its prophecy. That means we need to reverse this context to a bearish context, and we need to see this moving average dipping above the resistant context, and we need to have this moving average either flat or slightly bearish, but certainly not rising, okay? So that's the way to go. If we have a conjunction of those elements, we'll let the first flow terminate. Remember, it needs to create a third range boundary, and following this third range boundary, we'll be able to trade at the moving average or the Bollinger Bands, okay? And that's really the way to go. We're going to have to let that play out. That means rough estimate is the best case scenario for us. To get something means, let's assume we're at these sellable area prices by February or so. That means we're hardly going to be able to have a sellable or tradable bearish flow in the S&P 500 until somewhat like April or May. So that's definitely something that would account for as the way we are in now, we need to let the price behave out of this very dangerous double top area. Until then, we're still under the potential influence of H1 bearish flows. Remember that we are still, for now, in a weekly third range boundary territory, but we are very close to a monthly reference as well. So if we go higher, that's going to be 4-hour chart. So long and until then, the only thing we can do is H1 reference. All right? By the H1 reference for now, the moving average is still rising. So if, I don't know, we start to see some bearish reaction out of this, we need to see this moving average turning bearish. We need to see the resistant context falling below it. And once we have that, we'll be saying, okay, we have a potential reaction on this weekly third range boundary. And actually both those scenarios can play out for now. And there's no way you can differentiate one or the other. You just need to be agreed with both. If we go higher, then 4-hour reference it is. If we enter the 4900 area plus, then it's 4-hour only, okay? Until we stay, until we have decided that, and so long as we stay in this double top area, the only thing you can do is to look for potential H1 bearish flows. And for now, we have nothing suggesting this is the case. It might very well happen, but until it does, there's nothing you can do. All right? You're going to have to let this one play out. All right? We're in a third range boundary area. That's a bearish low risk strategy. You need to let this play. All right? That's really important for you to understand. And in the meantime, well, all that we're left to trade with is, I think, 4-hour reference volatility. It's just to say, well, until then, use your Bollinger Band, 2.5 standard deviation, wait for them to open up. I mean, the two Bollinger Bands going in opposite directions, and then let them converge. The two of them must go into a convergent direction, and once it does, just blindly trade, okay, the bottoms and tops, and just that's the way it goes. Trade at 2.5 standard deviation, be dumb in your assessment, and that's all there is. So frankly speaking, that's what I have to say. The current trading activity in the S&P 500 would be either short-term volatility assessment, 4-hour 2.5 standard deviation, or just wait for potential either bearish 1-hour flow or getting into the 4-hour reference, a bearish speculative area, which is monthly referenced. Okay, regarding cryptocurrencies, that's pretty much the same old stance. We're in a 4-hour reference here as well, but we've been there all along. We're in the second bullish flow, both for Bitcoin and Ethereum. They might have different structure now, because remember, we've stated that Ethereum has made a context-to-context move. Therefore was under the risk of potential third range boundary to be delayed, but that needed to break the lows afterwards, which didn't because we made new highs. So it's just once again putting it out somewhere in the future. Until then, well, it's just for speculators to talk about. So just let it be right now, so long as we don't retrace back down to 2200 or so to reverse the context, or at least get to this context, well, there's nothing to be worried about when it comes to Ethereum. You're dealt with by the flow trading, which means you can't assess the duration nor the distance. You need to let yourself go with that. You need to let it play out so long as there's no third range boundary. The third range boundary itself doesn't mean the market will terminate by then. We've seen that we can build third range boundaries and then breaking them up, and that's just the way to go. And so long as you don't validate and so on, we can still go higher. That means you can hardly be sure you're going to be buying at the lows or selling at the highs on a flow trading sequence. You just know what the rules are and needs to be for you to act. And that's exactly what I would like you to understand. When it comes to Bitcoin instead, there's a slight difference here because we are now closer to the support context, and we could have done the same old context to context as Ethereum just did before. So it could be just another false flag, like we're getting there and afterwards we make new highs, or we reject this third range boundary, but if it does, it has to break the previous low point. So that's really the way to go, okay? We can hardly state that. And until then, you need to embrace uncertainty. That means we've confirmed these flows, which means all the trades you might have in Ethereum or Bitcoin are all stop at break even. And until then, all that you risk is to lose all these gains. And I know how uncomfortable that may sound to you to just say, yeah, I have some nice gains now, I don't want to lose them. Well, you just need to behave that way. These are the rules and you need to abide by them. If you start bending the rules all over the place just because for whatever reason this time around you don't want to lose again, the other time around you don't want to take a stop loss or whatever else, you're just going to change the rules all over the place. So don't ever do it. It's just simple as that. Either you do it all the time or you do it never ever, and I sincerely suggest you take the second. All right, I'm not going to go through commodities this time around. Like I said, I have a limited amount of time, so I'm going to have to go quick on this one. But TLDR is, despite these flow tradings, the only thing you can do is just to switch to a more channel-oriented by using somewhat of the framework indicator, the alert indicator as a dashboard mode, and that gives you plain simple where you can trade ranges. Like if you have a look at Bitcoin now, you know that the moving average is out of context in 4-hour chart, which means, well, you can easily trade H1 ranges, okay? You just go into the H1 reference time frame, you know the moving average is inside the context. Give it a second to plot, and here we go, okay? You go back in history, okay, it was preceded by a directional move, trend, whatever, you don't really think too much about it. And that's basically okay. I picked the market top, okay, market top is in here, bottom is there, which means first, second range boundary, you put your fibs, and that's all there is for you to know, okay? Highs, lows, period, okay? You put your fibs, and that's the way it goes. And you can do two things. You know that if we go there, you're below the context, making new lows, so here is a buy. In order to retrace to 50% context and so on. Here is a clear sell. That's going to be a third range boundary. Plain simple like that. Okay, you can trade third range boundaries up there or pure range boundary. There's a buy out there, so you know where to buy, where to sell, just let the market move and let it come to you. Just don't do the opposite, okay? It's really the way to go. For Ethereum, that might be a slightly different picture there, but once again, trade with what you see. You go in there, and as we do intraday trades here, well, 4 hours trending, you can't go there. H1 is trending, you can't go there. 15-minute is trending, we can't go there. So maybe go 3 minutes, okay? That's all there is. I would sincerely not recommending trading 3-minute time frames, but that's the way to go, okay? If you want to do it with the S&P 500, plain simple in here, finding your reference time for range. Sorry about that. It's just the alerts for me to get the hell out of here, so I'm just going to try getting faster and faster. So clear, simple in here, only one time frame for you to trade on, H1 time frame. Just same story, okay? Moving averages in here. You've been preceded by a range. So here's your market top. Here is the third range boundary. It's been validated and confirmed. So now, well, you know what there is, okay? It's just do dumb trades out of this. Don't overthink things. Take the top to the bottom, okay? Here the top has been somewhat challenged in here. So that's how it goes, okay? Plain simple there. You had a dumb pullback in here, which has been profit taken now. You've got a dumb boundary here at 4,700 or so. So once again, you know everything there is to do. Here is a buy. The latest trade was a sell. It's been reached out to its target now, so let it buy. That's really the way to go. Okay? Until then, that's all there is for you to know this week. Sorry to leave you early, but that's the way to go. See you guys next week.